The average property in Ottawa lost about 6% of its value year over year across all property types, and we actually saw one of the slowest Januaries on record in the last 10 years as far as number of freehold properties show. This doesn't mean that the market's collapsing, but it does mean that things are a little bit slower than usual. Whether or not this carries on to the rest of the year is something we cannot tell for sure. But today we're going to look at all the different sections of the market to see what's going on in January 2026 as far as the Ottawa real estate world. My name's Tim. I'm a realtor in Ottawa and have been for the last 5 years or so. If you ever have any questions or you find this video helpful, feel free to reach out or like and subscribe so you get these videos sent to you directly as I release them. This particular market update is done in collaboration with a bunch of agents all across North America. So if you're curious about what's going on in other markets across the country or in the States, take a look down in the description below and check out their channels. They all know what they're doing and they are all fantastic realtors. And now without further ado, let's get into the numbers themselves, starting with freehold sales volume. So as the graph shows, we sold 374 freehold properties in January of 2026. This is up a little bit from December, which is pretty normal. December is normally the quietest month every year, but we can see it's down significantly from February of last year. And we can take a look here to see how this January fared compared to the other Januaries on record. So this dashed red line here is the 10-year average as far as number of January sales. And we can see that this was down from the previous January. 2023 was the probably the lowest one in the last 10 years. But other than that, this is the lowest January we've had for freehold sales in the last 10 years. 2021 and 2022 don't count. They were crazy. We can just memory hold those. That's not going to happen again in the next at least decade. But 373 is pretty low, even as far as relatively slow Januaries go. The other thing I wanted to look at before we got into the kind of meat and potatoes numbers was the months of inventory, which is one of my favorite stats to look at. We can see detached properties were just under that 4 months of inventory that would take us into a balanced market. Months of inventory, again, is what we get when we take all the listings that are on the market at the end of the month and divide it by the rate at which those properties were selling in that period. And it gives us a measure of absorption. Anything under 4 months is considered a seller's market. Anything 4 to 6 is considered a balanced market. Anything over 6 is considered a buyer's market. So the lower the number, the hotter that section of the market is. So 3.92 is where we're at for detached. 3.36, a little bit lower for the semi-detached section of the market. And townhouses are doing better than pretty much any other section of the market. The same as in 2025, 2.77 months of inventory. So that's the hottest section. Getting in now to the detailed freehold stats, we can see that the average sales price for a freehold property in Ottawa was $734,000. Median price was about $660,000. Both of those are heading in a downward direction. So the average price is down about 6%, median price down about 3.7%. Transaction volume, as we discussed, was about 373, which is down 6.8% from last year. New listings volume is a really interesting one to look at right now. So we can see that the number of new listings compared to last month, it's way higher, but January to December is not an apples to apples comparison. But compared to year over year, last January, we saw an increase of almost 15% in number of listings and a decrease in the number of sales. So what that tells us is more listings are coming to market, but fewer of them are selling. So that's what's leading to that higher months of inventory in the freehold sector. So it indicates a slowing market. It's not necessarily what's going to be going on for the rest of the year, but that's the trend we're seeing right now. Another couple interesting stats to look at, the list to sales price ratio is one I always like to keep an eye on. So this one's pretty consistent year over year. On average, people who are selling their freehold homes are settling for about 2% below the list price as far as the sales price that they're getting. Now, I can tell you from experience, there are some places where you can get much better deals than that, but on average, it's about 2%. So buyers have a little bit more leverage. They can negotiate themselves a bit of a deal off of the list price for the average property. Average days on market is creeping up as well, up 2 days from last January, up about 10 days from December. Median days on market is about 43. Termination volumes, it's interesting to look at. You can see how many listings are coming off the market, but a lot of these are listings that are just being terminated and then immediately relisted at a lower price. So this would be a really useful stat if if it didn't include those numbers, but it does. So it doesn't really tell us much other than there are some people who are coming off the market, but a lot of it is just price corrections. All right, getting into the condo sales volume now. I'm just going to move myself out of the way here. Getting into the condo numbers. So we saw about 155 or exactly 155 condo sales in January of 2026, up from December, down from February of last year. And we'll take a look again just to see how this compared to the average January for condo sales. So we can see this is actually down a fair bit from last year. 2023 and 2022 were pretty similar. 2022 was even worse. And then we can see back in 2016, 2017, it was pretty slow as well. So this doesn't tell us a whole lot other than to say it's definitely not a brisk January as far as condo sales. But let's be honest, that's not a surprise given how condos have been doing the last year or so. Looking at the months of inventory again, I was actually pretty freaked out in December when I saw how high the months of inventory had climbed for apartment condos. It was up at like 8 point something. It came down pretty significantly, but still definitely in buyer's market territory. We're seeing 6.78 months of inventory for apartment condos specifically. And I think that's probably where it's going to stay for a while until the prices come down and that inventory starts to get absorbed a little bit. And townhouse condos are basically tracking what freehold properties are doing. So we're down in technical seller's market territory, basically balanced market territory at 3.84 months of inventory. So again, still a really significant difference between what townhouse condos are doing and what apartment condos are doing. They're completely different markets, even though they're often categorized and tracked in the same statistics. Okay, and we're just going to get into the condo numbers now. Let me select them here. So the average price for a condo in January 2026, $385, median price $375, 12% decrease year over year in the condo average sales price. Yikes. And a 6% decrease in the median price. Transaction volume 155, down about 15-16% from last year. New listings volume 456. So again, kind of similar to the freeholds, the new listings have gone up, but the number of sales has gone down, and that's increasing the months of inventory. Average days on market for a condo is 67 days, so over 2 months to sell the average condo in Ottawa, and this is up significantly, 26-27% from last year. Terminations, we see the same kind of thing, a fair amount of cancel and relists that are happening. And I skipped it, but we can go back and look. The average sales to list price ratio is a bunch lower than it was last year, and just quite a bit lower than the freehold properties. So people who are negotiating on condos can really negotiate themselves some solid deals here below the list price. And remember, the sales to list price ratio is actually only tracking the sales price compared to the most recent list price. So if they listed it at $500,000 and then price dropped it a couple times down to like $460,000 and then it sold for $450,000, that $460 to $450 is what the sales to list price is tracking. So it doesn't account for all of the price decreases that happened. And we can see from the amount of terminations, there are a fair amount of those cancels and relists that are happening in this section of the market. Thanks for watching. I hope you found this helpful. If you ever have any questions, don't hesitate to reach out. Have a wonderful rest of your day and a fantastic February, and I will see you at the beginning of March. Take care.